Right, today is Tuesday, October 6th. This is the end of the day trading review. Now we've cut off just a little bit earlier than our normal cutoff time today, and I'm going to explain to you why. So today was a very interesting day. Following the adaptive entry system signals, you can see we had a nice little rising trend here, little neutral zone, declining trend, and then starting at about 12:30, we had this really nice long running trend to the upside. And we were kind of joking because the NASDAQ 100 futures were actually kind of sluggish in this time period. And we were kind of joking in the live trading room that, we needed to wake up a little bit because the dome, our dome, which is the trading platform that we use for trading the NASDAQ 100 futures, was very slow, moving one, two, three, or four ticks at a time, which is generally unusual for NDX. And one of the things that we frequently joke about too is from a technical perspective, we can see what the patterns are shaping up to do, what type of movement might be coming. And all we really need to trigger that movement is a news headline or a tweet. Well, today we got a tweet, and that tweet came at about 2:45 p.m. and it actually got out in front of all of the news headlines. And that tweet had to do with the stimulus package and negotiations in Congress. And the market did not react favorably to it. And between the 245, the open of the 245 bar, so the high of that bar, and the lowest low on the 305 bar, so 20 minutes, we moved 286 points. That was a huge move down, and we completely erased all of the upward bias movement that we had just talked about prior to that happening, that had actually gained about 100 points. So we wiped all that out, and then another 186 points down to the downside. Now, one of the reasons we paused our trading for the day slightly earlier than normal, normally we're trading right up until 3:30, maybe even 3:45, is because after a big move like that, it can be very volatile in terms of getting into a trade, taking an adaptive entry system signal, and immediately getting stopped out because the movements are so big. You have a 286 point move to the downside, and just a small fraction of that, 10 point or 20 point move to the upside, if you're taking a short signal, could take you out at our protective stop before you can even blink. For example, this bar right here opened at 11,287 and a half and traded up to 11,330 and a quarter. So rather than step into the line of fire, we decided to just take a pause. Now, those same signals could be good and give us another opportunity for additional profits to the downside, taking those signals to the downside. But we didn't really need anything more today, and towards the end of the day, we start to tighten up our caution on risk. So it was interesting right at the end of the day, kind of sluggish and even a little mundane as we were moving higher, consistently higher, starting at 12:30. So let's see what the day's performance ended up being. So we're going to scroll back to 7 o'clock. Those of you who like to take a screenshot of what the performance was from 7 o'clock forward. And there we go. So there's the screenshot. And then we're going to look at the daily summary. By now you know that there are two categories we primarily focus on so that we can show you how to translate your performance every day into the personal trading plan and see what your 12-month or 52-week projection of income is. Categories are trading from 9:30 to noon, all signals, trading from 7 a.m. Eastern to 4 p.m. Eastern, or whenever we cut off, but to 4 p.m. Eastern, taking only the trend and the trend continuation signals. Those are the two categories that we translate into the personal trading plan. We do those because one is taking only 2 of the 4 adaptive entry system signals, but trading for a longer period of time. The other one is taking all 4 of the signals, but trading for a shorter period of time. So we're just trying to show a blend of how each of those works, and then leave it up to you to decide what method you want to use, what signals you want to trade as a independent business owner of your trading business, and what time frames you want to trade. And before I jump to the personal trading plan, we chatted quite a bit today in our live trading room about this tool that Aaron created for us, where we're taking all of that data that we input trade by trade detail in real time throughout the trading day from 7 a.m. to 4 p.m. And we are able to then interpret it and share with people in our room what would happen, what has been our experience rate based on that data if you traded from 7 to 4, if you traded maybe from 10 to 1, if you traded all signals, if you traded only the trend bias, only the momentum signals. So it's really a pretty cool device now that allows us to see clearly what the overall performance would be. For example, if we traded all signals and the fractals, including the fractals, the average in an 81-day period is about $1,677 a day. If we traded only the trend bias trades and did so from 7 to 4, the average is about $632 a day. Now, we're not deciding for you what's right. We're sharing with you what the ranges are in each of these categories, and you can ask us in the live trading room to examine a range for you. We did quite a bit of that today, like we were looking at what if you traded from 7 to 9 in the morning because you have a job or have some other commitment later in the day? What if you traded from 10 to 1 because you're somebody who likes to avoid the first half hour of the market, which can be kind of chaotic? What if you have responsibility in the morning and you could only come and trade from, say, 1 or 2 o'clock until the end of the market day? We can sort all that. We can tell you exactly what is a reasonable expectation in terms of profit performance on the NASDAQ 100 futures. And it's a really powerful tool, and kudos to Aaron for the development. All right, so I'm going to translate these now into our personal trading plan. In the first category, 9:30 to noon, all signals, we took 26.25 points of profit today. And with the NASDAQ 100 futures, that is $20 a point per contract. It's $20 a point per contract. In our second category, we took 45 points of profit at $20 a point, and we had 15 trades. So I'm going to jump over to the personal trading plan. And today is Tuesday, October 6th, and we have two different tabs here in our trading plan, one for the all signals 9:30 to noon, and a separate one for the 7 to 4 trend bias and trend continuation trades. All right, so 26.25 points times $20 a point is $525, and our trading plan has scaled us up to 3 contracts. So we're trading 3 contracts of that, so that's $1,575. Okay. The personal trading plan is thinking here just for a moment. There we go. And as I said, we took 6 trades, and 6 trades times 3 contracts is 18 contracts. So a total of 18 contracts for the day. Now, the most important thing you have to do here is go up and study your averages. We've had 23 losing days out of 13.4 weeks. Factoring in the rate of losses per weeks, we can average out what our average winning day is and what our average losing day. So it takes into account both the actual average of every losing day and the actual average, blending together all of the winning days. And we can factor into all of that a frequency, occurrence rate, so that if we had originally planned on a loss rate of 1 day per every 5 days, which is what the personal trading plan begins with, and we're actually ahead of that plan, we factor that into the averages for proper planning. So our average winning day is 22.92 points. This is where I want to enter that to forecast forward. We're already through 13 and a half weeks. I want to see what the next 38 and a half weeks are going to be. So I can forecast forward by putting in 22.92. Now that takes the balance of my 52-week forecast and assumes that I could run at that rate. That's the rate of winning days that I've established so far in the first 13 and a half weeks, so it's a reasonable run rate for me to anticipate. And my loss run rate is now at a negative 34.78 points per day, 34.78. And so now what we've done is we've said we have these values, these average run rates through the first 13 and a half weeks. I want to use those same values to project the next 38 and a half weeks. And if I was able to stay on that run rate, what will my outcome be? And in this case, in this category of trading 9:30 to noon, it says that I have a potential income of $171,000 over the course of 12 months. That's having started with $5,000 in the account, and that's allocating 10% of the account to the number of contracts that I trade. And if the number of contracts, the margin requirement for those contracts would exceed 10%, then it's not going to present a higher number to me. It's only going to present to me, the trading plan is only going to scale up contracts based on the number of contracts being no more than 10% of the balance of the account. All right, so let's take a look at our other category. In this category, we need to enter our data first. That's step one. So step one is we did 45 points. So 45 points times $20 a point is $900 times 3 contracts, because that's where we've scaled up to, is $2,700. And we did 15 trades at 3 contracts per trade, so that's 45 contracts. Okay, we study our numbers up here. We're through 13 and a half weeks, and we've had 15 losing days, so less losing days, so we have a more favorable rate of occurrence here, and that factors into our average winning day and our average losing day. So our average winning day as of today is 34.26. And our average losing day is 26.56. All right, so we're going to plug those numbers in. We have capped our contracts at a maximum of 3 contracts for a 12-month period. And based on the run rate of 34.26 for our winning days and 26.56 for our losing days, and a loss frequency at a rate of 15 days every 13 and a half weeks. That is real numbers right there, having tracked and traded these in real time every day since the 6th of July. And that gives us an income forecast of $338,513. Again, we started the account with $5,000. So the way that you can adjust this is once you have a good established run rate. And when you first start out, folks, these numbers might be all out of whack. You might have 2 back-to-back losing days. And so you've got nothing in your winning rate, and you've got big numbers in your losing rate. The way to think about that is, I would suggest whatever you're choosing to trade, you let us help you. We can share with you in the live trading room what the averages are on a daily basis in whatever time frame you're trading. And you could use that as your foundation while you're building your own run rate. And then as you get a few weeks under your belt, you're going to know what your actual run rate is, and you can start then forecasting forward based on your actual run rate. The important part of building a financial forecast, whether it's for your personal trading business or any other type of small business or corporate business, is to be able to forecast the month, the quarter, the year, based on some realistic variables. And our variables are how often are you trading? How many trade signals are you taking? What is that resulting in for you in terms of production, profit production at the end of the day? And using that profit production actual run rate to forecast the remaining balance of your 52-week forecast. And what you're going to find is initially your numbers might be a little out of whack, so you might use a reference point that's based on some other someone else trading that has some time under their belt, and we can help you with that. But this is where you can adjust your forecast simply by increasing or decreasing the number of contracts you trade. We have ours capped at 3, but if we're confident in our run rate, we're confident in how we achieve that run rate, we're confident that we can do that on a regular basis, and we can always know that we'll never see the number of contracts scaled higher if it exceeds 10% of the balance of the account. So there's a lot of variables and limiters in there. Before I do this, I might say, I'm going to increase that to 5 contracts. I'm willing to trade 5 contracts if we get to that point. If I grow the account to where 10% of the balance of the account allows me to trade 5 contracts, well, there you go. That could increase my income potentially to $510,000 from the $338,000 that we saw. Now, none of the forecast numbers are ever going to be guaranteed to you. This is a daily process of you building some history for yourself through the first year. And the further you get into the year, the more integrity this data has. But nothing guarantees that you're going to make $338,000. If your winning days variable decreases significantly, or your losing day variable increases significantly, or the rate of losing days per week increases or decreases, those are all variables that are going to influence the outcome. So this is about building for the first year and constantly adjusting it. And then as you get into the second year of your trading and using your trading plan, you're going to have a real strong foundation of what your averages should be over the course of a year. But every day still, no matter whether you're in year 1, year 2, or year 5, you should come to the trading plan at the end of every day, input your personal performance so that you see what your actual run rate is, and then forecast forward based on that run rate. Regardless, this is a pretty significant opportunity to start with $5,000 and just simply follow the adaptive entry system signals. Limit your risk of margin, limit your margin risk to no more than 10% of the balance of the account. Let the personal trading plan scale your contracts for you, and recycle your capital every single day. You're just going to trade the same capital day in and day out. And one of the reasons that this works also is because when you look at the averages, you can see here that we have pretty strong win-loss ratios. This is on a per trade basis. So 73.7% win-loss ratio, 75.6, 73.6. Those are in the categories that we are primarily focused on. This category is not a category that we track in a personal trading plan, but it is the optimum performing category with the lowest frequency of negative days, the highest point ranking when stack ranked against all the other fixed categories, not counting the research. This is a variable that we can adjust to whatever we choose. And then the win-loss ratio, but the win-loss ratio on this category is 73.7. When compared to the other categories, it's so close. I mean, it's within a point, point and a half. It's almost not that significant. So to show it as stack ranked as number 5, really, I don't think is significantly concerning. The overall ranking is the lowest ranking of all of the other categories that we measure, and it's giving you $1,300 a day. If you add fractals to that, which we already talked about, it's actually an average of 16, just just over $1,600 a day. That's pretty significant right there, in my opinion. So we'll just put in here one example. We were looking this morning at if you only could trade from 7, say, to 9:30. I'll put it in as 9:25 so we don't pick up any 9:30 trades. So 7 to 9:25, if that's all you could trade, but you traded all the signals and you traded the fractals along the way, you could potentially average, and this is based on 81 days of trading history, 81 trading days, you could average just over $500 a day. $500 a day, folks, if that was your average over a 20 trading day month, is $10,000 over the course of a month. So that's pretty significant in my mind if you wanted to allocate a limited amount of time to your trading. So we can let you know what the number of negative days are, losing days. There are losing days you're going to have to wade through in order to get to these averages, but that's just part of the process. So the combination of this summary and us being able to help you interpret whatever time and method you want to use in the live trading room, that combined with a personal trading plan helps you really build a stable trading business and start to eliminate a lot of the emotion out of it. If you had a bad day, I go back here, we had a really low day, we lost 75.3 points that day. That could be very discouraging if you didn't have a point of reference to say, yeah, but that 75-point loss fits into a 12-month plan that now it may lower my averages slightly, but it doesn't completely negate the fact that I can make money over a 12-month period. That's what the personal trading plan is all about. It's there to help you answer the questions, where does this fit into my 12-month income desire, and when is enough enough? If you know that your goal for the day is to make 35 points, 34 points, and you've hit your goal for the day, and you've only been trading for an hour for the day, it might be a day that you want to step away and go do something else with your time that day because you've already met your goal for that day, and you know that you're on pace to hit whatever profit target that you've set for yourself. So today was definitely an exciting trading day. Not most of the day, but starting at about 2:45, pretty exciting. All this big sell-off here. Recovered just a little bit, had this retracement here a little bit, and it looks like now we're starting to head a little bit lower here. So it'll be interesting to see what the market offers us as opportunities tomorrow. Always happy to have you here in the live trading room, or if you're not in a live trading room, you're just following along with the end of day reviews. Thank you for doing so.